Are you ready to take your business to the next level? Every day there are countless books and articles that are published offering the key on how to make your business a success. It's easy to feel overwhelmed trying to keep up and run your business. That's why Deb Creer created the Business Power Hour. Keep up on the latest trends, best practices, and techniques for how to make your business a success. Let the Business Power Hour do the heavy work for you.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And we're going to be talking about an absolutely fascinating subject today, and let's be honest, one that I don't always know an awful lot about, and that's investing, that's financial, all of those things that I'm like, oh, this is way too complicated for me. But we're also going to be talking about how things are changing and changing rapidly. And a big part of that is because of technology. And so please join me in welcoming Tan Gera to our program today. Welcome, Tan. How are you?
Thank you very much. I'm happy to be here. It is 8:40 p.m. here in Dubai, and I'm excited.
I know. You know, that's one of those things that when you have international clients, you're just kind of whatever time works, right?
To be honest, I work a lot on US hours.
Okay. Yeah, I interviewed a guest one time and it was 4:30 a.m. their time. No, I couldn't have done that. Nope. No. So let me tell people a little bit about you and then we'll jump in. So Tan Gera is the co-founder of Decentralized Masters, a global investment education and research company serving more than 4,500 members across dozens of countries. A CFA Charterholder who passed all 3 levels by age 23, and that's a heck of an accomplishment. Tan spent 3 years in investment banking and M&A roles across Paris, Amsterdam, and New York before leaving traditional finance in 2022 to give ordinary investors the same frameworks institutions had been using for decades. Today, Decentralized Masters is one of the most reviewed investor education companies in its sector, with a 4.8 out of 5 rating across over 900 independent reviews. Tan is a contributor at Nasdaq and has been featured in Forbes, Yahoo Finance, USA Today, and Business Insider. He is also the co-author of the Exponential Investor, How Any Investor Can Profit from the 5 Technologies Reshaping the World Right Now. And as he mentioned, he is based in Dubai. So again, Tan, welcome.
Thank you so much. You hyped me up.
It's always fun to read our own bios, right? So, tell us a little bit more about how you got to where you are today.
So I'm French, from Indian descent.
Okay.
My parents immigrated back in the early 90s.
Okay.
I followed my education in France, and then when I turned 18, I was interested in business because my dad was an entrepreneur. But I was also interested in finance specifically because I heard that's where people make money. The thing is, I was pretty good with numbers, right? I've always been. So that's when I pursued a master in finance, went through the CFA program as well. That was a journey. It's like hundreds of hours of study, and you're competing with probably the sharpest minds in the world. That was a good experience. And I traveled. Actually, I was able to, work across a few continents and countries and financial capitals. So that built probably my social skills and resilience and, all of that. But then when I was 3 to 4 years into my career on Wall Street and then investment banking, when I had achieved the dream and then it was just about executing for years to come, I realized that it wasn't as fulfilling. And by meeting people, by traveling so much, I actually stumbled upon crypto, digital assets, right? Made a lot of money when I was quite young, and then I lost it all.
Oh.
And that's what, like over $1 million, actually. And I lost everything. And I'm very glad that I did, because that experience shaped me. That pain shaped me.
Mm-hmm.
And when I was able to actually rebuild everything on sound foundation, I would say, and when I applied a strategic way of managing my assets,
Mhm.
I just applied it to this
Mhm.
explosive new industry that is digital assets. That's when I clicked, and I did much better. I mean, I did really well, and this time I kept it, the next time. And that's when I was able to leave my job and decide to teach it, because I realized what I had been through and the whole investing system dedicated to this asset class.
Mhm.
I think no one had really done it before.
Mhm.
And I had the qualifications, because this industry is always considered as being very scammy, or it's for gamblers, or all this thing, which I don't deny. There's a lot of that.
Right. Especially
So I was
because it's
like,
new. That
yeah,
tends
yeah,
to
yeah.
happen. Mm-hmm.
It's always like that. Internet, in the first days of the internet, it was very scammy, right? It was very, because people take advantage of these new technologies. But I thought, hey, I have an edge here,
Mm-hmm.
and I have the qualifications, so even um, educated people
Mm-hmm.
would pay attention to what I have to say.
Mm-hmm. Mm-hmm.
And that's how we launched, this company back in 2022 with Salim.
Mm-hmm.
And fast forward to today, it's 170 employees, and you wake up one day and you're like, wow, what just happened?
Where did that come from?
Yeah. Uh, Almost 5,000 clients now, um, all truly engaged. It's a blessing to be able to, provide financial investment education to people so that they can change their financial path. That has a massive impact on their lives. And it's really about that at this point. It's about impact. So
Right.
that's how it all came to be. We had to put our heads down and really be in the cave for 3 years, building the company, doing absolutely nothing else. And then suddenly you get your head out of the water. You're like, wow, what just happened? So that's how it came to be.
Mm-hmm. I love it. And I love that your focus is education because, as I kind of alluded to, it's complicated. I mean, I know nothing about crypto. And I'm going to attribute part of that to my age, right? I am much more of a traditional type of investor. That said, I'm certainly not opposed to it, but and I look back like at my mother. She invested in CDs. That was it. That was all she didn't invest at all because to her, she wanted it in essence zero risk. And I think that's a big part of this is as it gets newer, as it gets, things like that, the risk does tend to go up. And, depending on someone's stage of life is maybe the way to think about it, a little more risk adverse, you've got a family, you've got kids you've got to feed, get through college. Well, you might not be, you might want to be a little bit less risky than when, or maybe when you're really young. I mean, oh gosh, when I was very young, I invested in things that were really risky because they made money, right? Now, did
Like
they lose?
what?
Right, right.
Like
Okay,
what?
so this is going to show my age. Apple and IBM, right? Because initially those were and they still are obviously tech stocks. And people didn't really know what they would do. But they made good money. Because that was obviously the industry was going and then things kind of leveled off. But I think that's one of the cool things is as things change, they come on, they're pretty risky to start with, and then they kind of level off. I think AI is probably one of the best examples of that. It's still considered fairly risky. But talk to us not about using AI, but talk to us about stocks like that and the emerging technologies, because there are several.
Exactly. So our company went from teaching about decentralized finance to a broader topic, which is crypto,
Mm-hmm.
to a broader topic that is any tokenized assets.
Mhm.
And that's why now we not only teach about digital assets like crypto, but we also teach about digital assets like tokenized stocks or tokenized gold or tokenized
Mhm.
real estate. What we're
Explain
trying
what a
to say-
tokenized means.
Right. I was coming to that. So money is going digital,
Mhm.
whether people like it or not.
Right.
And all assets
Mhm.
that, right now are spread across so many different logins and like papers and contracts, they're all going to come online as well.
Mhm.
Right. So
Mhm.
the tokenization of a physical asset like real estate, for example, is that you take your house and you break down its ownership to shares, a little bit like a company today.
Okay.
And let's say there's 100 shares to get the final value of the house, and then there can be multiple owners
Mhm.
of those 100 shares. Okay? And so today, are you able to buy this $100 million penthouse in New York? No, you can't.
Right.
Or maybe you can. I don't know, Deb. But
I wish.
But tomorrow, you certainly can buy a share of it
Okay.
thanks to tokenization,
Mhm.
right? So that's a simple way to put it so that everyone can understand it. But extend that way of thinking to literally every existing asset that is already being traded, but also every illiquid asset that is currently not traded. So, for example, private companies, you can't really do that because they're not traded, right?
Right.
Tokenization is going to allow that. Okay, cool. Let's move one level further. Art. You could buy 100th of a Picasso.
Mhm.
You could do it with real estate, like I said. You could do it with music,
Mhm.
royalties around music, patents,
Mhm.
and just literally, you know what? If tomorrow we finish this interview and you think, wow, this one was a smart guy. I think that he's gonna grow his net worth really well because he's really smart. Then you would be able to buy into the 10 token.
Ah. So I'd be investing in you.
Yes.
Okay. I almost said gambling, and that would have been very bad. But some people would think of it that way, right? Because
Yeah,
not quite
because-
sure.
But in 3 generations from now,
Right.
do you think that they would think this is gambling? They would think it's
No,
absolutely
it would have
normal, and they would think
definitely
it's
been investment.
and they would think it is crazy that our grandparents didn't do that because then it would probably be fully part of the culture and something that is widely accepted, right? If you go back 15 years, was posting photos on Instagram about your personal life something common? Everyone would say this is crazy.
Right.
But now it would seem very weird that you don't do so and that you're not on social media, right? Things change. You just have to be able to forward looking enough to understand it. And finance is being completely rewritten thanks to digital assets
Right.
or
Right.
tokenization.
Right. Yeah. Now I mentioned in your bio that usually, or the way it used to be, was that there was the traditional investment, and it was the big entities that were investing and doing things. I spent some time working for ING. My husband worked for ING his entire company, or his entire career, and that's an example of that, where it's a big organization that does investments over multiple things. But now, especially because of technology, we're able to invest on our own. Like you said, I could buy 100th in something. So for the people like me who are still going, oi, I don't know what to do. How does that work? Because it's fascinating to me that I could do that and do it on my own.
So what is your question exactly? How do you invest on your own?
Right. Yeah. As opposed to, like a standard 401k or something like that.
Right. So here's the thing, right? Let's start with the problem and then we go with the solution and how it can be done. The problem is the entire industry today is built around around a misalignment of interests. Financial advisors, they charge you 2% of your money, but they're never incentivized really to grow your money. They're incentivized to keep your money as long as possible because this is what would make them more money, right? Now, of course, if it grows and stays, it makes them more.
Then
But
that's good.
by definition, if it just stays, they're going to make a big chunk. And the other issue is that they're allowed to promote products of affiliates who are not necessarily the best for you. They're the ones that make them the most money in affiliate sales.
Right.
Okay. Now, this misalignment of interests and the complete ignorance of retail when it comes to what to do with your money,
Like I
be
said,
it
that's me.
financial or investment education, makes it so that you're trapped. You don't know what to do, and the people who are supposed to know what to do, they don't have your interests at heart. Big problem, right?
Right.
So what is the solution? Well, there are all these companies that came through that allow you or anyone to just trade and buy whatever and sell whatever you want without having to go through these advisors. Or the big brokers, that only serve sometimes institutional clients.
Right.
But you haven't solved the education piece. And so
I
either you're
just
a
tell
self
them go do. That's my education.
so either you're a self-learner and you're gonna go on YouTube and try to piece things together and grab some info here and some info here,
Eh.
because it's not very structured.
Right.
Right? They don't tell you first this, then this, and then that, and fourth this, and don't go to fifth unless you've done fourth, right? Or you find an education program and service. Because I'll also tell you this, right? When you go and tell to someone, hey, go and do this for me and invest my money, the issue is that you don't understand it enough to be able to delegate it.
Right.
And the issue that often happens that our clients and members tell us is that, hey, I gave to a bunch of advisors, but obviously they promise you all these things, and then 2 years later you wake up and they've made you no money. Yeah, but isn't that on you?
Right.
Because when you assess them, you didn't have what it took to assess them, and so you take everything they told you to face value. You believed what they said, but you had
And
no
you don't
ways,
question them.
and you had no ways to actually understand whether they were doing right or wrong and pull your money out, or even in the early decision say, oh, you're a crook, you don't know what you're talking about, I'm not going to go with you. Well, what is the only thing that solves that? Education. Now, if it's not part of your, I don't know, high school or whatever material that you study, right? Or your college, whatever. If in financial education, even personal finances and all of that, like, how much should I save? How much should I invest? How much should I put towards my rent? How much should I put towards my car loan? All of this is like, it's just math at the end of the day, right?
Right.
No.
You have X
Well-
number of dollars and or whatever your currency is, and where's it going to go?
Right. And people don't make these choices intentionally. They just spend, because they don't understand. If I told someone, hey, don't ever pay more than 20% of what you make on your rent, maybe they wouldn't blow up their accounts and be in debt. Anyway, so that's one side, but then investment is the same thing. You're not trying to optimize for your personal finances. You're trying to invest the chunk that you're able to save from your personal finances, then make it grow. Why is that helpful? Because at the end of the day, your pocket and how much money you have and how much money you make in this capitalist society, whether you like it or not, it has a massive impact on your life and on that of other people. The more money you have, the more you can actually impact society
Right.
for good. And like, if you want to give it to other people, you can, or if you want to use it to build a business that impacts other people, like I did, and enrich yourself while doing a great service and with purpose, you can also do that, right? So, or run a charity, whatever.
But you have to have money to do that. I mean, that's the thing.
And so there's only one way, truly, to get wealthy, is to have equity.
Right.
Is to own equity. So either you launch your own business and you grow the equity, meaning the value of this business, and you sell your shares or a bunch of your shares, or your business makes so much money that you don't have to sell the shares, but at least you're making money out of it, and you still know that you own a piece of something very valuable. Or you go and buy the equity of others, like you did with Apple and IBM, and be like, I think your equity is going to be worth more. That's really the only way. But why don't we put all the chances in our favor by actually buying some education or accessing some education, however that is, that helps you understand what is the best way to acquire that equity to grow your wealth, right? That's literally what we teach, the system,
Right.
because there is a system. The system as a personal investor, as a retail investor, to invest like the institutions. How do they do it? Well, why don't I do it? Well, with today's tools, it's possible. You just lack the education, the knowledge that they have. Let me and my company bridge that so that you can do it on your own. And people are just loving it because they're like, oh, I get it now. I was doing things that I had it completely backwards. This is how you do it. Yes.
Right. Well, and it's all basically a matter of scale, right? An institution might invest 100 million in something, and I invest 1,000 because proportionately that's, and yeah, so it's an education is to see where are they investing. Now, yeah, I'm investing a much smaller amount, but the strategy is still the same.
Exactly. Now, that is true. There's another thing that can be an issue, which is because they have a higher amount, they can sometimes get better access.
Right. Yeah, they
Right?
are able to negotiate better terms and things like that.
Well, that used to be true, but the power of our community is that because we have 5,000 members, our combined net worth
Yes.
as a community is over 4 billion. Now, the magic in that is we're bigger than most institutions
Right.
out there now. And so an army of retail getting together gets access to better terms than institutions because they pooled everything, like not the money together, but the knowledge and the network
Right.
together. So that's the magic of what we did, and that I'm very proud of, is that now, as a group, as a community, we are considered as an institution. It's just that it's an addition of retail investors. And so they get better access, better education, better information, better everything, just because they decided to pool their knowledge and effort together. And that's cool.
Right. Now, one of your strategies, and your primary strategy, is what you call the all-weather strategy. So talk to us about that.
So yeah, basically we created a proprietary investment system called the ABN system. The all-weather protocol is the first phase.
Right.
All right. So
And it's got
it's
three.
modeled. Yes, there are 3 phases. So phase A is called the all-weather portfolio. It protects you. It's basically learning how to answer these 2 questions. What should I buy and how much of it should I buy?
Okay.
Pretty simple, right? So it helps you understand what kind of assets are out there, how do you classify them, and how much in terms of percentage of your overall pie should be allocated to each and why. Okay? That way you have a balanced, well-diversified portfolio that is all-weather, meaning market goes up or down, you're well protected. And it can still appreciate. It's not that difficult, but it's essential. It's the
Right.
foundation.
Yeah.
Then phase B.
It's the bottom of the house, right? You
Right.
have to have a foundation before you can build anything else, or it will fall over.
Exactly. And it's the biggest driver of your returns. If you do that right in the get-go, in the beginning, and you understand it, then you're set. And phase B is what we call becoming your own bank. It helps you make money with your money, meaning, okay, I'll take an image here. Let's say you buy this real estate property in Miami, beachfront, beautiful. Okay, Deb, and you think, I'm going to buy it now, and I'm sure 3 months from now, I'm going to flip it for a profit.
Okay.
Okay, fair, right? You buy it for $1 million, you think you're going to sell it for 1.5. Okay, that's your assumption. Now you have 2 options for 3 years. Either you just let it sit, or you put tenants in it,
Ah.
and now you increase your cash flow, right? You get an extra 10%, 15% additional a year. Why not? Which one would you pick?
Oh, well, hopefully I would pick the second one.
Cool. Well, we do the same thing with digital assets, because today it is possible to earn cash flow from literally every asset you own. So once in phase A, you have selected what to buy and how much of it to buy, and you know you're going to hold them for a certain amount of time, you don't just let them sit, which is basically what people are doing with their stocks, with their
Right.
crypto, with their whatever asset. They're just buying and holding. But no, now you can buy, and what you can do is you can get paid to hold these assets because you provide liquidity on them to some traders who might need it or whatever. Okay. And it's collateralized, it's super safe. And they're going to pay you fees. And those fees are paid on the volume, not paid on whether it goes up or down. You get paid no matter what. So that increases your cash flow. All right. We call it yield.
Right.
And then phase N, which is the last phase, is when we go into early stage riskier opportunities. But
Okay.
these are the ones, because there's higher risk, there's higher reward, right?
Yeah,
But
like
we like to
AI
go
and robotics and
exactly, and we like to go into these projects that you were talking about with the fees we earned in phase B. And so now I'm going to come back to one of the questions that I left to the side voluntarily because I had to really explain the whole thing. This is where, in the native markets, we call them, we find the early stage investments that are in the new technologies. So AI is accelerating everything. AI is accelerating biotech, meaning medicine, because we're able to cure and find the solution to problems that we weren't able to before. Maybe we're going to reverse aging at some point. I think it's going to happen very soon. AI
or
is
at
able
least
to
slow it.
yeah. AI is also accelerating robotics. Your robots are going to be AI integrated, so they're going to be smart, right? Better to have a smart robot than not. But also, AI needs energy. So energy is getting a lot of investments because without energy, there's no AI. Without AI, there's no robots and medicine. And all of that is going to be traded on blockchain rails, on crypto rails, right? This is where these assets are all going to trade. And all these new technologies are going to appear in the native markets first, which are the decentralized markets, where new projects create, like raise capital, get created, and it's accessible to everyone in the public, but no one knows that. So phase N, we teach people how to buy very, very early to get those home run opportunities instead of buying once the price has already appreciated in value a lot, and you only get, that last part, iceberg, if you want.
Right.
That's the ABN system for you.
I love it. Many years ago, I worked in a tech company, and it was funny because we actually designed software for the government. But they were really, really smart guys, and several of them would spend an hour at least every morning reviewing their entire portfolio, buying, selling, and I was always told, buy, but then just let it go. I mean, don't panic. And I think we're seeing a lot of that right now. Especially here in the States, the market goes up one day and goes down one day and goes up one day and goes down one day, depending on what's going on in the world and who posts on social media, right? And so I think so many people, you get in panic mode, right? Because sometimes things might go a little lower than you were hoping for, but most of the time they will go back up. And so it's the patience is maybe the thing I'm trying to come up with. Is that kind of one of the things that we struggle with? We don't want to be patient and just see what's going to happen.
Actually, we call this behavioral finance.
Yes. The
which is exactly the emotions that you have to control, right? And the market is just the sum of the emotions of all the market participants.
Right.
The way you're able to control your emotions is heavily going to influence your results, right? But the reality is that the buy and hold strategy is dead. What Warren Buffett and Charlie Munger have been saying for years, that is not applicable really to this new market. Okay. It's more of an in-between. You don't need to trade and do all of that every day. It's not true. I don't do that. But you certainly need to be a little more active.
Right. Don't buy something and 10 years later think, wonder what it's doing.
Exactly. Like you need to be active in your profit taking and stuff like that. Most people, they let it ride and it goes up, they don't take profit, it comes back down. Hey, you had the opportunity. If you knew the system to take profits and get paid, you would have done it and you should have, right? So it's a bit in between. Um, I truly believe that behavioral finance, actually, you know what? CFA level 1 and CFA level 2, they were thousands of complex math formulas that you need to know and need to know how to apply. And you can't make it up. If you don't understand the formula or you don't know when it needs to be used in a proper problem, you're not going to get your CFA charter, right? Level 3, which is supposed to be the last ultimate boss level, it's mostly about behavioral finance. It's about emotions, and it teaches you all that. So yes, 1000%. It is completely part of our education, and we teach people how to master these emotions, and it comes a lot from planning, a lot of it,
Right.
because you're feeling these emotions because you have no plan and you're uncertain about where, why the market is doing what it's doing and how you should react to it. Okay. If you had clarity on what your plan is and what potentially you could expect or scenarios, you wouldn't be making those um,
Panic.
panic trades, those panic trades and closing positions. And then you're like, oh, you see the market going back up. You're like, oh, why did I do this? So we've had to lose millions. I've lost millions in the markets over the years to eventually start winning big. And so we don't want people to have to go through this. So there's only 2 ways you can learn is from your own mistake or someone else's mistake. We tell people, why don't you learn from mine?
Right. Right. Well, and you've got that institutional knowledge. You've got, all of these big brains that are tying in here. And I'll be honest, big brain, I can't get over the fact that you and Salim are so young and doing this. But I think, to me, that is where it's the benefit, right? Because the people who have are more mature, the older folks, they tend to be a little bit more risk adverse. And they don't look at the new technologies and things like that. I mean, we still see people today. I saw this on Facebook yesterday. Somebody posted, and this is a person who I consider to be very smart. I will never use AI. And I thought, honey, you've been using AI for years and didn't know it. But that comes back to that fear factor, and so what gets rid of fear is education.
Exactly. And you'd be surprised. We have our demographic is widespread, but we have a lot of retirees and they're very, very involved, and it brings them a lot of youth back and energy and
Right.
being part of a community that is looking at all these new technologies and they want to understand it and they have a common willingness to do it. It is invigorating. So I've been very pleased to see that we have members sometimes in their 70s and their 80s coming to join. Yeah. And they listen to young dudes like us. I'm just 30. As far as, the age and like how fast we were able to do this, I mean, we've been at it for a while. It took us it's been 5 years now. But yeah, I agree. I mean, it is quite big.
Right.
We have a group of companies at this point that is quite big, sizable, but we're really passionate about helping every age group. It's just a blessing, honestly, to be able to provide that education to people because they're so grateful. We've done a live event in Miami. There was over 250 people who joined. It was probably 3 of the best days of my life.
I love it. And it's like I said before, it depends on someone's stage in life as to what they're going to do. And the key is always, and this comes back kind of that gambling analogy, don't risk more than you can afford to lose. And so maybe somebody who is in their 70s has basically two pools of money. They've got this is my retirement. It will get me through until I die money. And then there's we can have fun with this money. And that to me would be the wise way to do it.
Yeah. Not only that, but also actually the I can't run out of this money thought is actually what they care about most when they join, because when they come, we teach them about all investment and asset classes. As I said, we also have a stocks program, right? And oftentimes they have a lot of stocks. It's not because they already have it and they consider it safe, that what they were doing was correct. So when they come, they're able to have education and understanding and knowledge about everything that their money is doing, what is good, what is bad, what is what needs to be optimized, etc. And so the price tag of joining versus, sometimes people are sitting like on $1 million. They would need less than a percentage gain to make it worth it, just with the right information. Are they gonna get at least a percentage in gain back on their portfolio by getting access to the right information? Hell yes, like easily, because no one is well optimized in what they're doing. So oftentimes everyone needs to learn this, in my opinion. You just can't afford not to understand how to make your money work and grow without you working for it. So that's what, brought this wide array of people. A lot of the elder generation also wants to leave a legacy behind. So it doesn't stop when their life stops, right? And so they bring in their spouse, they bring in their kids. Sometimes some do it with their grandkids. They do it together. And it's a treat to watch, seriously.
Right. Well, and it might also be, speaking of legacy, they might not have heirs. And so they want to set up a scholarship. They want to set up a foundation. They want to do whatever. And I'm seeing more, and maybe it's just because I'm in that demographic. I'm seeing more and more people who are doing that, and a lot of them are saying, and I'm not leaving it to my kids. They want their kids are on their own. They can do their own. And I love seeing that because they're teaching their kids to be financially independent. Anybody who is, I don't care where they are, relying on, hey, when mom and dad die, I get X number of dollars. Ew. But that's a lot of what, has happened.
And what are you going to do with it?
Right.
Blow it away or build a bigger pie, grow it.
Right. And that's the thing is to, if you do get it, and I'll be honest, okay, my mom passed away 2 years ago. I'm an only child, so I got everything. It was not a ton, and that was okay, and I had actually encouraged her to spend it as she was alive. Don't save it for me. I just thought that was kind of So what we do, that's my play money. That really is my play money. And that's what we travel on. That's what we do other stuff with. But now I'm thinking, I could take that money and make it into even more play money, right?
Okay, so I sold you.
Yes. Yeah. I mean, and that's the thing. I think, and I mean, like my parents were brought up during the Depression, especially my father. I mean, he was a World War II veteran, so he really, and so they did not risk. And that was what they told me, you save, but they also, and I look back now and I think they didn't have fun, because they were so concerned about, we can't spend. Now, again, you don't want to spend so that you're worrying, but yeah, why not have a little bit of fun? And I think that was what was so good about my mom is, she took numerous big trips. Now, she took me and my husband with her, so that was fun. But yeah, she was like, no, I'm going to spend it and enjoy it now. For some, that's their legacy. For others, it's, they are going to do an endowment. They're going to do something, but it is definitely something that I don't think enough people think about. And more importantly, they think, well, unless we're along the lines of Elon Musk, we can't do that. But so many people can easily do it, at whatever level.
That's honestly what I was talking about the uncertainty. They just don't know what they don't know. And that's just the cost of ignorance. And whenever you invest in yourself and education, you realize, hey, it was really not that complicated. There are some proper frameworks I need to follow. I understand them. And the reward is that pie grows every single year. And instead of starting to enjoying that pie at, age 65,
Right.
what if you enjoyed it at age 45?
Right. What if you don't get to 65? That's
Also true.
Right. Well, oh my gosh, Tan, this has been so interesting. And, I definitely want to delve more into your materials. But for someone who is saying, I'm ready, I need to talk to you, how do they find you and what are the services that you provide?
So they can type Decentralized Masters on Google or decen-masters.com, which is our website. We're all over the internet at this point because, it's been a few years we're doing this. So there are reviews, there are videos, there are case studies. We have a YouTube channel as well with hundreds of members explaining their experience. There must be someone just like you or your auditors, or at least tens of them, who are sharing their story and how this changed everything because it opened the possibility for so much more in life. When you have this skill to be able to grow your money. So yeah, I mean, I'm sure you're going to share the website, but Decentralized Masters on Google, and then it's just an application form to fill, to work with us, and our team will call you back.
Great. I love it. Well, this really has been absolutely fascinating. And I feel like I should have you on every year because things are going to change drastically every year. Actually, we're recording this about 10 days before it's going to go live, maybe 2 weeks. Who knows what'll have happened in those 2 weeks? And that's the thing is things are changing so rapidly that people cannot afford to not be keeping up on them.
Absolutely. I 100% agree. And it's only going to accelerate from here. So don't make my last word is truly this. Don't make financial decision, or at least stop making financial decisions in isolation. You can't tell your friends, you can't tell your family because they wouldn't get you. And then you make terrible mistakes. Surround yourself because these decisions really, really matter big time and have a big impact on your life and that of others. So surround yourself.
I love that. I love that. Well, I am Deb Creer. I've been having a fascinating discussion with Tan Gera from Decentralized Masters. And until next time, everyone have a great day.
Tune in for our next program for even more trends, best practices, and techniques for how to make your business a success. The Business Power Hour, hosted by Deb Creer, is proud to be part of the C-Suite Network.